Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 4th of September, 2018, and we're just after 1:45 p.m. Central Daylight Time. The wheat market got hit today, and the reason it's hit is in part there was that meeting this week that Russia called, the ag ministry there, with the exporters. The idea was if the exports had gotten beyond a certain number, or if they were concerned at the ag ministry that the stocks were depleting too fast, they would put some levies on wheat exports. They decided not to, and they told them to go full out, keep the exports going. So while you bounced, at one point you were down over 26 cents in the market, it did come back up. Beans close to unchanged, and the corn market a little bit of a bid. There's some concern with all the wet weather that's been hitting the Midwest, and if you're watching the news, you can see what's going on in the U.S., flooding lots of different parts, that we won't get into the early harvest part because the fields will have to dry out and there's more rain forecast for a good part of this week. So that's one of the issues. The farm program details were released again today formally. Those went out so everybody knows where they can go, and I guess we'll start seeing soon what the government's going to be doing. The dollar up a bit. Stock market, as the traders came back from holiday, sold that off. Metals got sold off as well. So as we come over to the weekly area chart of closes, you can see for the week you're down a penny here in the front month of the beans as the market has come down. Hasn't gotten through these old lows, but it's certainly come down hard again, and the market continues in what we'll call a down thrust. You can see in the November bean how the market came up, and in this contract, the market actually closed up 0.75 cents. If we come to the swing lines, you're out of a trend. What the market's now got is a pattern of a lower low and a higher high. That is not a trend. A downtrend would be lower highs, lower lows, an uptrend, higher lows, higher highs. You don't have that. You have the opposite. Also, the market is staying under what I call the line in the sand. The 18-day moving average of closes is my term for the line in the sand. When the market is under it, I say the market has a downside bias. When it's over it, an upside bias. And markets that are under it, should they rally back to it, they often find that area as a resistance point. When we take a look at Bollinger Bands, remember what they are. These black dashed lines are an algorithm designed to keep the market trading within it. Now, how the market hits the band, be it on a top side or a downside, is very important. I tend to teach, and do teach very aggressively, you're always looking to see what momentum is doing as the band is hit. In this case, you hit the band. The market at that point, as we come to it, you can see back here, was all oversold as you were hitting the band. Then the market started bouncing away. Now, slow stochastics are a study that if both numbers are under 20 for several days or more, I say it changes from oversold to locking in momentum. Momentum in the case being under 20 would be bearish. Here you have both markets last Wednesday under a 20 reading, Thursday under a 20, and Friday under a 20. So now you've got your embedded reading. Even with today's small bounce, both numbers are under 20. Therefore, even though the market is lifting up, until or unless the red line gets back over 20 on a closing basis, I say this market is still under the influence of willing sellers stepping in and hitting it. In the meal market, it is the same pattern. So we're getting a bounce, but is it enough to change anything? Don't know. At 321.20, I would expect to see resistance, and until the red line closes over 20, I say the market still has itself locked into a downtrend. In the soybean oil, what we did today is get back up to the upper Bollinger Band. Now, as this market had opened early, I was putting out for my subscribers a report showing them that I thought when the market was rallying that it was going to basically run into that resistance at the upper Bollinger Band. If you look, 2,900 was the high. You finished 28.78, and 2,900 was the upper Bollinger Band. So you stopped right on that number, and you pulled back a little bit. The trend is still up, and soybean oil is part of the crush spread. So it's going to look to see what meal and beans do and decide where it goes from there. Very important is that this market's caught in much of a sideways action, nothing going on one way or the other. In the corn market, you have a pattern of lower low and now a higher high. Now, I'd like to come back here to Friday's close. On Friday's close, you were up 8.5 cents. As this is one of those patterns where the market gets a close over 20 after being embedded. When that occurs, unless it immediately falls back, which it did not do last night when it reopened, what happens is I look for price and the 18-day average to come together. You can see you got up to 368 3/4. That number's 369. Whether it hits it tomorrow or not doesn't matter. It's a 1/4 cent. For all purposes, you've gone there. When I look at the slow stochastics in the this market, which is the wheat market, what I'm looking at, I don't know why it says that. It's sort of strange. But in the wheat, what I'm looking at is the market is oversold in a downtrend. Resistance is the 100-day average. The reason is it's under the 18 and the market doesn't seem to be able to extend to that 18 yet. If it does, then the 18's the resistance. But in some cases, you get where that 100 is there. That's what you've got. Support back at 515 1/4. The problem is you're already in oversold territory. It's a market that lost its embedded reading. When it lost that reading right over here, the market had hit the same day the closest moving average. So whether it'll get to the 18, I can't tell you, okay? The odds don't have to go there. In the sugar market, I expect to see resistance right at the upper Bollinger Band at 1077. Overbought market. I will not be surprised to see the pros stepping out against that upper Bollinger Band if they have long positions. Going short, no, because you're over the 18-day average, which gives you upside bias. In the coffee market, you still have a pattern of lower highs and lower lows. The market is in oversold territory. So will the bears get aggressive? My own take on it is questionable. Why get aggressive in a market that's oversold? In order to correct it, you either have to embed, which you're nowhere near doing, getting both numbers under 20, or get a bit of a rally to get out of that reading. Well, if it's going to rally and the odds favor it, what's to stop it from rallying a bit more? Don't know. In the cocoa, you have a pattern of lower highs, lower lows. It's countered because the market's over the 18-day average. So the bias is up. The trend, as I define it by the swing line, has the lower highs, lower lows, and you're overbought. I'll call this market a mess. In the cotton, very interesting day. You broke down, got under the most recent lows, and then you popped up today to a high of 83.04 over Friday's 82.97. That means you have a lower low and a higher high pattern. You're out of a downtrend. You're fighting a battle at that 18-day average of closes in red, that line in the sand, and I'd expect that. The cattle market was super interesting today. First, it breaks down. It got to a low of 108.17.5. The 100-day average, was right here at 108.10. Then the market reversed course. It takes out the lows first of Friday, reverses course, gets higher, and when it took out 109.40, it had caught everybody, and it zoomed at the latter part of the day, closing at 110 higher. The same thing happened in the feeder cattle. You got down, took out the lows of this day. You were still in a downtrend at that point. Because of it, you got traction at the 100-day average. As it approached the 18, the market stalled for a bit, and then once it took out the high, it just kept going. Now the target's the upper Bollinger Band, but you're overbought already. Last in the hog market, we heard that there's more. Another Chinese province has gotten over the weekend African swine flu. It's a difficult mouthful for me. Lower highs, lower lows, resistance back at 52.85. The trend of the market is oversold in a downtrend, downside bias as well. You put it all together and you try to come up with game plans. And one of the things I'm going to be doing this season for you is different game plans. Now, one of them I've been showing. Now I'm starting to record others for your library. But this is pivot points, and I added last month a third video to it. So I first teach you the the formula. And a lot of traders use this, so it's something you might want to look at intraday to see where support and resistance points are showing up on the daily charts, 15-minute charts to be specific. Then you get a neutral point, which is the white, sell points above, buy points below, and I add momentum to it. Once you do so, you can set yourself up with a game plan. So how do you learn about this? It's really simple. Call us. You can go to our website. You'll see pivot points. Sign up. We'll send you the links and everything you need to get into this. You can click up here if you're watching me on YouTube. It'll be delivered to you as well. Just sign up for everything and it'll get right out to you. I'm Ira Epstein. You have a great day. It's nice to be back. It's what I call the beginning of the trade season. See you in my next videos.